Hello everyone, today is Friday, February 18th, 2022. My name is Evan. Welcome back to our weekly stock market analysis video series. If it's your first time tuning in, thanks for joining us. Thanks for being here. Here's how these videos work. We break up our analysis into two parts. In part one, we look at everything that went on this week in markets. We go beyond price action. We look at correlations and sector performance and market internals, really sort of just pick apart everything that looks different, interesting, or notable. And then in part two, we jump into the charts, we look at those longer term trends, try and make some sense of price action and where we might be headed. So hopefully that sounds good to you. Let's jump into some of the headlines from this week. We've got follow through selling in the equity market. So this is, remember something we talked about last week where we had the outside reversals being printed kind of all over the place in the indices, stock level, sector level. We tried to lift up last week. We reversed and closed near our lows. And now this week, we essentially continued lower across equity markets. So we got that follow through selling week. We got follow through buying in gold. So gold started to get that breakout last week. It surged more this week, and we're seeing the VIX pretty comfortable in the upper 20s. So those are some of the takeaways. Again, we do also have a long weekend. So we have Washington's birthday, stock market closed on tomorrow, Monday. So enjoy the extra day off. Now let's jump into some of the performance here from this week. You can see in the right-hand column, we have basically everything pretty deeply red. Dow Jones down almost 2%, S&P 1.6%, Nasdaq finally not the biggest loser, 1.7%. Russell showing some relative outperformance again. So for like the second, third week in a row. In fact, you can actually see over the 1 month numbers now, the Russell 2000 is positive and is actually sort of leading the charge. Remember, Russell 2000 led on the way down. So it was kind of the most severe index to kind of break down early and sell off aggressively. And now you're starting to just see kind of the opposite take place here, where some of the other indices maybe are catching back up to where the Russell, landed, so to speak. World stocks also doing well again on a relative basis, down 0.5%. You can see again 1 month numbers improvement over what the US markets are doing. If we take a look at market internals, very ugly week out there. So basically, again, everything under the hood here continues to look very poor. So we have almost 1,000, 52-week lows, highs minus lows made this week. So those are the, again, just to clarify, highs minus lows. So net number is almost 1,000 stocks hitting new 52-week lows this week. We saw 1,100 stocks on the decline, cumulative AD line, week summary, and also percentage of stocks over 20 SMA sitting around 39%. If we look at that as a visual sort of perspective here on the stocks making highs minus the lows, you can see that this trend is just really looking, uglier and uglier. So this is what's interesting is when you look at this view here, right? Overlay this, and this is really the chart I should sort of create, is overlay this over the S&P 500 or over the Nasdaq or Russell, right? And basically what you're seeing here is while those indices aren't necessarily breaking to new lows this week, they got close, but they didn't quite break to new lows. You've got underneath the hood here, this is breaking to new lows, right? Like the momentum in the number of stocks hitting new lows is still on the increase. So that is a good sort of visual there on what's happening underneath the hood. If we take a look at sector performance, again, nothing that is too pretty here. We basically had one standout, was consumer staples, up 1% this week. Every other sector was in the red. We had materials in spot 2, consumer discretionary in spot 3. And then on the downside, we had energy finally taking a little bit of a hit and breather this week. We saw communication services and financials. If we take a look at correlations, so correlations is interesting. So take a look at this block right in here. So right where my cursor is on the left-hand side, gold, silver, UUP, which is the US dollar, USO, which is WTI crude oil, and take a look at the negative bright red inverse correlations to all of these assets to the Dow, the SPY, the Nasdaq. And so basically what you're seeing is this inverse relationship that is really taking place here. Remember, these are 10-day correlations, but what's interesting to note is obviously now if you're, hindsight, of course, right? Because we don't want to project this necessarily as to how this is going to take place in the future. But, basically, your perfect sort of hedge to stock market carnage over the past couple of weeks has been long gold, long silver, long US dollar, long oil. And you did pretty well compared to what the indices and equities have done. So we'll see if that relationship continues. But clearly, you've got some nice differentiated movement going on right there. A couple of other strong correlations kind of building here, Bitcoin, junk, LQD as well. So if we move on to volatility, you can see again, this is really nothing pretty here. So we've got the blue line, which is this week's volatility term structure, and a flat line. I mean, it's almost a straight horizontal line across. That's nothing, that's not good. You don't want to see it in that type of shape. You like to see in a really bullish market, you want to start in the bottom left here and sort of gradually kind of rise all the way up and to the right. But basically, you're still seeing that fear very much priced in here. VIX is comfortable in the upper 20s, which basically, just again goes to show sort of the turmoil or indecision over the front month VIX futures. If we take a look at interest rates and credit, so we saw yields fall this week again, pretty much across the curve here. So we saw interest rates finally starting to maybe top out a little bit. So rates were something we've been talking about. That was one of the big takeaways from last week is we sort of, published on the idea that maybe U.S. Treasuries are finally bottoming here. Maybe yields are finally topping out. And you're still seeing more evidence. It was a little bit rocky at the start of this week, but basically the way we finished, we're still seeing some evidence that that might be the case. So let's continue to keep an eye on it. It's early, but that's why we're highlighting it, is because it's early and it's notable. So let's continue to talk about that. We'll talk about that more in part 2. And you can see that the LQD, JNK, this has still been in rough shape, generally speaking. So high yield credit, still something that is concerning out there. If we finish off here with the dollar, it's pretty flat on the week, so not too much to say about it in terms of performance. You can see commodities, generally speaking, though, were sort of a mixed bag, I guess. We had gold, which was up pretty nicely here, 1.91%. Silver as well. Bitcoin was down, ag down, crude oil down, natural gas getting a nice pop again. It's been very, very volatile here, but moving back up to some prior levels that we saw last week. So this is the summary here. If we take a look at the report card, you can see X's across the board. It's pretty funny. Nothing crossing over to any type of hope here on this report card. So it's a straight F. Now, I will say, right, this is where time frame matters. And, when you take a look at some of these stats, so basically nothing good to say. There's really no glimmer of hope in sort of any of the data we just looked at. But, occasionally when things look so bad, right, when everything is so bearish, that could, that could be a short-term kind of capitulative turning point sentiment-wise and, just analysis-wise. So let's not forget that, while we're in this downtrend from a broad basis, we can see these sharp rallies, right? So an F here does not mean, it's just an easy short into next week and it's easy to just sell everything. It could be quite the opposite. It could be the fact that, we're hitting some extreme readings. Everything looks horrible. Everything looks dismal. And, nobody wants to own it. Therefore, it's a good excuse to get a nice little bounce in markets. So something to keep an eye on and think about. Timeframes definitely matter, but that is the report card from this week. If we finalize here with our trading systems, our positioning here, so our Merlin trading strategy, this is the top one here. This has a 56% allocation to the market right now. Most of this is U.S. Treasuries, though. So in fact, actually, more than half of this, 56%, is bonds, basically fixed income. So it is very defensive. It is not equities. It is not aggressive. It is not risk assets. So it actually has an even smaller piece of the pie here, which is still in equities and mostly cash otherwise. So very, very, very defensive. On our short-term system down here, Lamerick, it is starting to pick up a little more on the long side now. You can see 33% aggressive, 33% invested, trying to get a little more positioned here as the market has sold off pretty much for 2 weeks in a row. And so now it's starting to get a little more interested. It's still in pretty defensive areas of the market. So it's not like slinging around tech or anything right now. It's mostly in, staples and some, select positions in those sectors. So that's it. That's how we are positioned. That's where the rubber meets the road. If you want to learn more about these trading systems, you can sign up for a $1 trial. There's a link appearing in the top right hand. It'll teach you a lot more about how these systems operate, how they generate signals, and whether or not they could be a fit for you to trade. So that is it for me. We'll be back in just a second here with part 2. All right, we are back. We've got TC2000 open here. We've got our equity market grid showing, and we have this custom smart trend filter that we've developed. It measures price and volume across time, helps us determine and measure trend and trend strength, path of least resistance. Those are the multicolored dots you see on these charts. So this is a weekly time frame, and if we start in the top left here, S&P 500 still hanging on like a champ to this yellow neutral sort of rating here on our smart trend filter. It has not produced a sell signal like the Nasdaq has or like the Russell has. So it's still hanging on here. I suspected it would turn down this week, but it didn't quite get enough energy to the downside. So it did close lower this week, but still not enough to tip this down. So S&P 500, jury's still out, yellow, but below our smart trend filter. Nasdaq, this is the 4th week in a row here that we have been on a sell signal on this weekly time frame. So this first produced a sell signal back here in January the 28th, and market continues, well, I guess back towards lows here and still in that sell position. Same thing with Russell 2000. Even though this has been the relative outperformer recently, this was the first to turn down in the 3rd week of January here, produced a sell signal, continues to be the case. ACWX still kind of hanging out choppy, yellow here with some mixed signals over the past couple of months. Now, if we go down to the daily chart, we have a little more sort of interesting behavior going on here, a little more cross currents happening. So the S&P 500, again, you can see still riding out these yellow dots on the daily chart, but the prior signal for the S&P 500 is definitely sell to the downside. So back on the 28th of January, we got, is when we had our last sell signal, but we usually kind of say that, we give the benefit of the doubt to that last signal, in this case to the downside, and so far price has been kind of respecting this smart trend filter lower. Nasdaq, same thing, actually got a fresh sell signal here on Friday, so this one still looks pretty rough shape, but take a look at the Russell 2000. Again, speaking of this outperformance, and it's taking place now or showing up here in trend strength as well. It is trying to print a series of yellow and green dots here, so this looks very different than kind of anything else. The Russell 2000 is trying to hang in here. I'm still very suspect on this index, generally speaking. So again, this is a shorter term signal, but it goes to show and illustrate that we have got some general kind of rotation or less selling taking place in small cap universe. And then ACWX, again, you can see some green dots printed here. This is that relative outperformance that we've been mentioning for international stocks. So let's now take a look at some candlestick analysis. Let's get a little bit tighter here on our levels. If we go to the S&P 500, we've been looking at our very, very simple view, which I believe was board 8 here. Yes. So this was kind of the roadmap we were paying attention to. We basically had these 2 big bands that we were watching, which was basically 40, call it 4,300, but just below that, all the way up to 45 and change, up to 4,600. That's kind of our lower resistance, lower support, upper resistance zone. And we drew this big rectangle in here last week or the week before. And we basically said, look, a reasonable scenario in the foreseeable future is just a bunch of chop in between 4,300 and 4,600. That's basically a 6% range for the S&P 500 to play in. So far, it's pretty comfortable playing in this zone in here. So it's just in the middle of it right now, working its way towards the bottom. And, we'll see and measure if it gets back down to around 4,300, how the market reacts back at this level. And we also then projected, if we do start to spill over and roll over and we make some type of measured move back down into the lower 4,000, almost 4,000 on the dot, if we were to take kind of this initial impulse leg and project it down for a second leg lower, this is where we sort of arrive at. And again, not a prediction, it's just a roadmap. It's a potential path that this market could take. But before we could even think about that, the market's going to have to start breaking down below 4,300, and it hasn't done that yet. So really not too much to say about it, right? Lots of movement this week and over the past handful of days, but structurally, nothing has really changed. The market's just in this high volatile, choppy state. And in these periods, it's best to just usually do a little bit less and, focus on the big key levels. So 4290 to call it 4600, that's what I'm paying attention to. If we take a look at the Russell 2000, again, we sort of talked about the fact that all this overhead supply, so year-long range, we broke down from it, and now we are kind of bumping our head back up against it, right? We had this potential kind of like bear flag set up, and you could argue that we started to break down from it Thursday and Friday of this week, right? So even though we are holding up a little bit better here, the structure, right, just doesn't look all that pleasant. This isn't necessarily a market that I want to be eagerly trying to buy right now, just is a little bit scary. Again, if you're a short-term trader, if you're swinging for a couple of days or intraday, then obviously, buys and trading the volatility and these ranges make total sense. But from a slightly longer-term perspective, I'm just a bit concerned here. If I, had all this wall of supply above me, I'd want to see this market prove itself out a little bit more. So for me, Russell looks like it's, potentially even just starting to break down right now. We'll see how that shakes out into next week. And last but not least, if we look at the Nasdaq 100, we're kind of looking at it on this big long view here. We got this nice channel that has been riding up and to the right in. It broke down from it in January, and it looks like, it got basically back up to around 370 here. This was a couple weeks ago, and then it basically started to roll over from there, took another shot to the upside right in here, put in a lower high, and then started to roll over. So once again, when we look here at the Nasdaq, we basically are trapped in this range. We've got a series of lower highs, lower lows, and we've got this level here, which it almost closed below, but it didn't quite make fresh new lows below this 340 zone. That's what we want to see, if it can hold. Again, this chart looks pretty ugly right now. There is some, positive momentum divergence brewing. Maybe, we can get, let's see, a high volume sort of breakdown move, freak everyone out for a leg lower here, do it with some very heavy volume, suck in all kinds of late short sellers, and then reverse, aggressively, next week. That could be a bottom type scenario, right? That could be something that would trigger some type of near-term liquidation or washout, but we don't have that yet, right? And you could still draw that same projection where we have this down here or this up here is the first initial impulse leg down, and then you project that lower, and you could, come up with about a 305 target here for the Qs on a second leg lower if we start breaking down below 340. So that's, kind of the roadmap here until we can start breaking out above these highs, until we can go sideways more, until we see volatility come down, until we see breadth improvement. I mean, these are all things that we talked about in part one that are just not going in the bull case, in the bull's favor right now. So let's keep an eye out as we come into support here. Again, just to round out one last, as we come back into support, a bounce off of here, a couple of days, very possible, right? Very, very possible and in the range of probabilities, but structurally longer term, things look a little bit rough. So that is really the roundup there on the overall markets. Let's take a look here at a couple of others. Let's take a look at the VIX, which has been stubborn up here in the upper 20s. So basically, we have been really trading above in this 20 to 30 range now for the past few weeks. This week we got as low as around 24, so we got down to the middle end, and then we kind of popped right back up. So VIX really not letting up here, so this continues to put pressure on just equities in general. TLT, so this was our U.S. Treasuries call last week, where we basically said let's pay attention to what's going on here. We saw some heavy volume coming in last week with this hammer, and it was already sort of oversold, and this could start to be the turning point here for TLT. And you could look at IEF, right? Any of these, U.S. Treasury bond proxies here, like this is all kind of looking the same. But basically, we saw some further selling pressure at the start of this week, but then take a look at another hammer or this fresh hammer getting printed this week. Again, heavier volume, still seems like it wants to try and bottom out here. Again, it's early. It's very tough to call a bottom, but there is evidence here that maybe this can start to lift. We also had gold. So if we look at gold here, let's stick with gold on the weekly chart. You can see this has been picking up volume now and starting to accelerate higher. So gold is a position that we've been, much more bullish on over the past couple of months. We were clearly a little bit early in terms of starting to like it, but it is starting to prove itself now and shape back up. Put in a 2% up week. Last week it was up 3%. So it's starting to pay off here, GLD. It is, objectively a little bit overbought. So again, if you throw Bollinger Bands on here, it's above the upper 2 and 20 Bollinger Band on the weekly chart. And on the daily chart, it's was above it pretty much all yesterday and then for part of today. So, it's a chase right now if you're looking into it now. But if you do believe that this big old consolidation that's been taking place for the past handful of months, half a year, can start to lift up then and start to break out, then, there's potentially much more ahead of gold to the upside in, kind of the second quarter. So we'll see how it takes shape one day at a time, but gold looking pretty nice. Let's finish off here with some sectors and industries of interest. So we've got our scans built out here, which really just sort of identify individual industries, right, which are smaller than sectors, and then the sectors themselves that are outperforming or showing some just notable volume. Something to pay attention to. So for the bullish side, not a whole lot, right? We had airport and air services, which were coming back up here. So you can see heavier volume coming in and starting to close back up towards highs. That's notable. Gold. So basic material sector gold starting to lift up. That makes sense based on what we just talked about. And then we have REITs, hotel and motel specifically, heavier volume starting to close back up towards the upper end of this range. That's pretty much what stood out to the upside. On the downside, this list is much bigger here. And if we page through them quick, you can see Apparel Stores, one of them, looks really horrible here. Looks like it wants to leg lower again. Asset management also looking like it wants to start to leg lower. Beverage, wineries, and distilleries continuing to sell off pretty heavily. We got healthcare, biotech, that is, continuing to leg lower here in this downtrend. We've got business services. We've got chemicals, which was really just a high volume reversal, didn't really break any support yet. Financial services sector, credit services specifically. We got diagnostics research, healthcare sector. This looks pretty rough here. We've got electronic gaming, multimedia continues to see heavy volume kind of come in here as this trend extends itself down. Financial data, we've got gambling. We have home improvement stores, which are finally starting to sell off a little bit. They've been in very, very strong for a really long time. Medical devices, residential real estate, heavy volume coming in this week. Security and protection services, semiconductors, that big outside reversal there. And not quite an outside reversal, but just a big kind of pin bar up top, big tail up there. Software application starting to break down again, and software infrastructure as well, and then some more utilities as well. Besides that, you've got some of the spider sectors. So you've got XLV, which is working itself lower to new closing lows. You got semiconductors, you got biotech, and you got technology. So long list and a pretty diverse list to the downside here. So, keep that in mind. Remember, when everything looks bad, you might get those short-term bottoms and pops. There's a lot of things that look really bad right now. We've been basically on the sell side of this market, or saying that things look pretty glass half empty for a for a while now, for a couple of months. So let's just keep an open mind that sudden bounces and finding support and short coverings, all of that can certainly occur here when things are kind of looking this rough. So that is it for me. As always, I'd love to know what you're looking at this weekend. What has your attention? Are you getting any glimmer of hope here? Are you buying anything? Are things getting cheap enough for you? What's the sentiment out there? Anything piquing your interest, or are you pretty defensive right now? Leave a comment below. Love to hear it. Enjoy your long weekend. And as always, thank you so much for tuning in and watching. Every Friday, we do our long form market analysis video series, and you can subscribe to our YouTube channel or follow us at thetraderisk.com. Thanks so much. We'll speak to you in the next episode.